Did you know there's only 4 simple rules that you need to be able to analyze any chart? This is Doc's Market Minute for Sunday, the 30th of January. Let me show you those 4 rules. Let's start out today's Market Minute with a daily chart on the S&P 500. So after a couple of tough weeks to the downside, we're left with a chart that looks like this on the daily chart. Where on earth do you start to analyze a chart like this in terms of what the potential moves are from here? Everybody wants to know whether the price is going to bounce and go higher or whether this is just a consolidation pattern before it's going to start to really sell off very soon. Now, what most newer traders will do to this is add studies to the bottom of this to figure this out. So they'll add some type of RSI down here. They'll add MACDs to the equation, which is going to affect what happens with the price. They'll maybe add Bollinger Bands into here as well too. And of course, several different moving averages besides the 200-day moving average that I have listed here. And what happens is you end up obscuring the exact thing that you want to see with clarity, which is the price. So adding all these studies to the bottom tends to compress everything on the chart so that you're left looking at a very small, flat, horizontal representation of what the price is doing, which is actually what we want to see. We really do want to see what the price is doing because this is the most accurate way to examine a chart is through the price alone. As an alternative, let me show you the 4 rules. So the first thing that we need to know is what is the context of what's happening. And this is where rule number 1 comes into play. Larger time frames dominate the trend. Let's move out to some different time frames besides the daily chart. Let's move out to the monthly chart. What's going on here at the monthly chart? This is one candle to the downside. This is not a change in polarity. This is not a change to a downtrend. This is still higher highs and higher lows. We have not changed the trend yet. This is still an uptrend on the monthly chart. Now let's move to the weekly chart as far as larger time frames. Yes, we've come down to test the recent lows down here, but again, this is not a downtrend. This is not a collection of lower highs and lower lows in the weekly chart. This is simply a swing down. So what I would say on rule number 1 is when we look at the larger time frames which are dominating the trend on this chart, I would still say that this is a bullish chart with higher highs and higher lows, obviously undergoing a pretty severe pullback at this point, but no more than that. Now, what would have to happen to change that is we would have to see a collection of lower highs and lower lows on whether it's the weekly or the monthly chart. The larger the time frame of that reversal, the more severe the implications are. So according to rule number 1, larger time frames dominate the trend. There's still an uptrend in place. Let's go back to the daily chart and let's talk about rule number 2. Rule number 2 states that reversals start from the inside out and they propagate higher. Now, this reversal started way back up here on the daily chart with that lower high and a lower low breaking out below this trend line in this channel. And this is where the downtrend really kicked in on the daily chart. So that's all well and good, but what about this pattern down here? When and if would this reverse back up to the upside? This is where rule number 2 comes into play. What we can do is we can go down to a smaller time frame than the daily chart. In this case, we can go down to something like the 4-hour chart and look at this and see that we already have what amounts to a higher low here, and the price would simply have to get above 44.50 to create a change in polarity or a true reversal down here. So this is a downtrend, lower highs, lower lows, lower highs, higher low, and then this would be a potential higher high. So this is very important now that we can see that, and we couldn't see this on the daily chart. We could not see this on the weekly or the monthly chart, but this shows us that smaller time frames do really start to drive these reversals. And so this is why we need to have a more fractal approach, which involves different time frames, which allows us to see these early reversals. So in this case, a close above 44.50 on the 4-hour chart shows us that we are reversing back up to the upside. Now, the converse of this, if we take this away, again, shows us that if that does not happen, if the price is unable to get above 44.50, then this could be setting up as another lower high, and a trade below there, a close below 4,300, shows that this is just a consolidation pattern, probably more of a bear flag, and that we might be heading lower from here. So this allows us to give two levels where we can really see what's going on, whether it's 44.50 to the upside, or maybe even a close below 4,300 to the downside that shows us whether the next move is to the upside or to the downside based on rule number 2, reversals start from the inside out and they propagate higher. Now we're going to move to rule number 3, descending patterns break to the upside eventually. Now the converse is also true. Ascending patterns will break to the downside eventually as well. So to understand this, again, I'm going to stay at the 4-hour chart. It doesn't matter whether we use the 4-hour chart or the hourly chart, something with a smaller time frame so that we can see with clarity these lower highs that set up. What we're going to do is we're going to set up a trend line from some of these recent highs, and we're going to connect as many dots as possible along the way. We have several points with lower highs along here. Each of these is a lower high. And then what happened on Friday, being this is Sunday now, is that we finally did break above there. So again, this break is the first early warning that a descending pattern or a downtrend may be reversing back up to the upside. Now, I put the emphasis on may be reversing. We will know for a fact if the price does break above 44.50 and closes there, especially on a daily close. Rule number 4 states that range expansion leads to range contraction, and range contraction leads to range expansion. What I mean by this is that markets don't go in one direction forever. Think about you running up the side of a mountain. You're only going to get so far before you are going to be clutching your sides and be out of gas. You have to take a minute to sit down, rest, and then you can start your move again. And you're only going to go so far before you have to rest again, and then you can resume your attempt on the mountain. This is how markets move. They go from range expansion to range contraction. Range expansion, range contraction. This is how markets move. We had a very strong move over the last couple of weeks to the downside. Range expansion from this consolidation pattern has led the price to be what we consider to be exhausted. This is a study that I use, which I call Fractal Energy. It's based on the choppiness index, and it shows the linearity of any move. This is an extremely linear straight move, and it will create almost an empty amount of energy. It's almost as if you're looking at a fuel gauge here, where we have full over here and empty with this. So markets will move like this, range expansion, and then they'll move to range contraction. So what you're seeing is the energy is restoring itself through this consolidation. This gives us a highly accurate way of determining when a move has just gone a little too far and is approaching exhaustion. This is where we would anticipate going from that range expansion to a range contraction. So this is already passed. What we're seeing right now is this daily chart is building up energy again and is getting ready for the next move. Now, which way is that next move going to be? This is where we're going to be looking for those price levels that we talked about before in rules 1, 2, and 3 to allow us to understand and anticipate the break from either the upside or the downside once this energy gets up to an important level again. If you want to know more about cleaning up your charts and being able to analyze any chart, any asset, and any time frame, consider looking at my Amazon book called Fractal Energy Trading, or the full online class is available if you're an Elite Inner Circle member. Available at elite.readyset.trade. See you in the next Market Minute.